Hello traders, it's Samurai Trader. Welcome to our market recap. I've been away for close to 2 weeks on an extensive tour. I'm back in town, and so all those emails that I've been receiving, I apologize if I haven't got back to you within the next give me 3 or 4 days and I'll be back to everybody. It's been a very busy time and some great times in the field doing some live courses and doing live training with clients. It's been a fantastic couple of weeks. Even over the Easter break, there's still been some fantastic trading opportunities. So today we're going to do something a little different. I've been asked repeatedly actually about trading the YM, the Dow, which is $5 a point, and typically you have less volume, well, not typically, every day you have less volume than say trading the NQ. However, it's still a fantastic market to trade. And with one of my clients this morning live training, he wanted to specifically focus on the YM, a market that he loves, which is what we were doing. So I fired off a couple of trades there, and we've had some winners there. I had a fantastic day on the NQ. We did some great trading on the NQ market, but today's wrap up I'm going to really focus on the YM, and I want to show you a few things there. Before we get underway, for the newer traders and even the more experienced traders, I've got a lot of things happening on my chart. They look very cluttered, and let me just perhaps simplify them a little here. So there's a lot of things here that you don't actually have to have on the chart, particularly if you're trading with the trend only. And let me just disable a few of the things there and make it a little clearer. So if you're a newer trader, after a month of looking at the charts and understanding how they all work, you will pick these up. Trading and learning to trade with my methodologies is not difficult. It just takes some screen time and understanding. It's no different than driving a car. Remember when you first hopped in a car, particularly if it was a manual, which is the best way to drive. So you're driving a motor vehicle, you've got to remember to push the clutch in, touch the brake, all of those things. Use the accelerator, turn the wheel, use your indicators, and at first it's daunting. However, because you really wanted to learn to drive, or most of us did, you pick it up within a relatively short time. And it's exactly the same when it comes to trading. When I was away the last 2 weeks, some of my clients, some interesting things come up, and I just really want to quickly cover some of the points here. And I know it's not a full PowerPoint here on your screen and it's not all sexy. Once again, as I say to everyone, my webinars and seminars and one-on-one is direct, raw, and to the point. So excuse if they're not a really fancy PowerPoint, but look, there's some key points I want to cover. First of all, Thomas Edison said this: if we did all the things we are capable of doing, we would literally astound ourselves. And that is why most of you, of course, have attended my courses and webinars or have been trained. So in this recap, I want you to remember that you can astound yourself, particularly if you're a newer trader and you have perhaps searching on YouTube. And this is just so true. And it really comes down to absolute and or developing confidence as a trader, which is really important. Now, to gain that confidence, and I know I've received, I think I've got 24 emails I need to answer about the live trading room, so I'm sorry I haven't got back to you. In a few weeks time, and actually it'll probably be 4 weeks because of some other travel commitments I have, I'll be launching a live trading room which will be trading after the first hour of the New York Open for 5 or 6 hours a day. We'll be live trading. There will be a maximum of 50 seats because it's designed not only to call live trades as we're about to look at now, but also to educate. So it's about giving you a fish. That is, I'll be doing some fishing and you can shadow trade with me, but also teaching you how to effectively trade as well. So please email me at trader@IamADayTrader. Yes, my old email is back up, trader@IamADayTrader, for further information on the live room. Now, I get many questions from traders and from all over the world, and as I say, there are no new fundamentals. Be careful of someone that says I have a new fundamental, or be careful of a person that says they manufacture antiques. All right, let's remember that I've back tested hundreds of trading systems and strategies, hundreds, and I'm about to show you a couple of things on that in a moment, so please be patient. We will get to the live charts in a moment, but I've come back full circle time and time again. And so let's remember, successful trading, as we look at on the chart, is a game of probabilities. The market has a memory. Patterns repeat themselves every single day. And if you really looked at it, besides being a sniper trader, I'm a pattern trader. I'm a sniper waiting for the pattern, because the patterns appear in every market. As long as the market has been in existence, these patterns appear. Now, yes, I tell it how it is. I don't want to sugarcoat it, because in training you, I don't want to cop abuse from you either. But what I don't want you to do is to do some of the things that I've had to do over the last 25 years. Now, most of you, and those of you where I've done one-on-one training, have seen my huge library. I have literally hundreds of books, and this is only a small sample of them. You can see in the background there, and yes, that's my good-looking self you just saw there. But straight behind me here are literally dozens of folders with research reports in them, and trading systems that we've purchased, and research reports, and more books, etc. And fortunately, I've been able to employ some outstanding researchers and employees and programmers that work with me. In fact, very soon we're launching a new company called WeTradeForYou.com, where we actually do trading on behalf of clients and automated trading for institutions and for funds. And that's and just before you wonder when that's about 3 or 4 months away. The website's not even up, so it'll be called WeTradeForYou.com. Now, for We Trade For You, we've got some fantastic trading strategies and systems that we'll be releasing that are automated as well as manual trading, and we've got some absolute beauties. Now, for purpose of a couple of slides I'm just showing you here are just to show you can make money with automated systems. Now, but you're not going to make the money that I want to make, for an example, as a day trader, because I'm going to have once again, you have wider stops, and there's a whole lot of other things that come into it. And when you're trading using a computer and using these automated systems, the test results are, yes, we've got some fantastic win-loss ratios and great returns, but I don't achieve $200 to $400 a day per contract, and that's the average return per day trading the E-minis. And in the next video I'm actually going to do today as well, a recap on the euro dollar. Once again, 200 plus, romp it in 200 to 400 a day most days in trading forex. So we don't achieve these. However, for our institutional clients and managed funds, these trading systems are great. And the point is here, when I bring this up, I don't want you to go and do this and go and buy hundreds of books and courses and be constantly looking for the Holy Grail, because I'm going to give you the Holy Grail. The Holy Grail is there are no new fundamentals. It comes back to the day trading, the floor trading methodologies that have been around for years, of what I use with my manual trading, because they work. And probably the most important thing I've learned is to become a sniper with them. That is, look for the reliable patterns and trade the patterns and sit on your hands. And as I say to everyone, beware of the man that tells you he's manufacturing antiques. That is, I still see systems and strategies being sold for thousands of dollars where they say we've invented something new. Well, I haven't seen any new fundamentals for years, and I've got two of these absolute brilliant brains working with me in the US that are programming, and one's a financial engineer, and once again we would have come across it. So getting back to it, save your money. Don't go out and spend tens of thousands or blow your accounts tens of thousands of dollars, as I see. And just on that point, you hear me talk about on a regular basis the psychological damage of traders. And what do I mean by that? I get emails every week about that. When you go and blow an account, or you have a bad run of losses, you start to cherry pick trades, and you start to look at a chart, and you start to read the chart, and you start to trade what you think, not what you see. You need to trade what you see, not what you think. Excuse me. And the problem when you blow one or two accounts is you're doing all the thinking, and of course you ruin yourself. And so it's absolutely critical that from day one you start to learn to trade correctly. And that's why I'm such a big believer that when you use your simulator, that you use the simulator as if you're trading real money, because off a simulator you develop habits. Okay, so let's get into the chart now, into the YM. So if we go back to the Globex market, the pre-open, on here, this dark blue line is something I don't normally put up, but it's something that I used in training with my client today, and just as an added tool which I find really useful. And it's using the Andrews Pitchfork. And the Andrews Pitchfork is great for recognizing your trends. And I'll just leave it on, even though it's cluttering the chart, but it's just great for an example. Now what we can see here, our aqua line here, our cyan, my apologies, is our 89 EMA, of course, and then we have our 200. So this is giving us a trend. Then we have our T1, so we can see T1 trades firing off left, right, and center. Now of course you want to be trading with the trend. Now I'm going to show you a couple of counter trend trades I've took today, but traders, don't do it unless you're really profitable. In other words, don't start taking counter trend trades unless you're really profitable as a trend trader, because remember the rule: become a master, become an epic trader at trading one setup before you move on to another. Now I have 12 core trade setups that I use. Sometimes some will fire off at the same time, but your T1 is your T1 and your T2 is your best trend trade you can have, and that's all you need, particularly if you're going to trade something like the YM, which is $5 a point, because you romp 11 to 15 points in every move. Now this isn't, by the way, an 89 tick chart. So if you want to replicate what I've got here, it's an 89 tick chart. Now the question is, if it comes up regularly, and particularly when I was on tour, do I use an anchor chart? Well, I do at times, and the anchor chart I use, and let me just quickly pull it up here for a moment, and once again you can see here the pitchfork I've got just here for trend, which we'll get back to. The anchor chart I like to use, because it keeps the charts fairly smooth, is a 9 range. Okay, so that's a 9 range anchor chart. So on here quite often you'll see 3 or 4 days of action. And so what sort of action have we got? We've got a very clear uptrend, haven't we, the last few days? So but I'll use my trading chart is actually the 89 tick. Now if the market's moving very quickly, I'll jump up to a 133 or 144, and as most of my students and clients know, I use a 133 on the NQs. Now even on the NQs, which is something I should mention, and on a lot of other markets, if the NQ is slow, drop your time frame down to an 89 tick, because it's a great time frame, because also it will keep your stops smaller. As long as you're trading with the major overall trend and following the trading rules of our setups, your stop is going to be smaller, and of course you can have a higher target so you can get in earlier. So it's another great benefit of trading some of these lower time frames. But once again, with the YM, you haven't got a massive turnover or massive volume each day, but it's a great market. So let's just scroll along here a little, and let's go to the market open here. So once again, traders, I want to be trading with the trend. Now these moves here, as you can see, we've got some great 10-20 point moves here. And look at this here, beautiful 89 bounce, a T1 with an 89. Now just look also at my blue lines, my pitchfork, which also on you can easily draw using trend lines. And I'm not going to digress today and start talking about trend line trading and using those from an anchor chart and dropping them onto our lower time frame. But pitchfork is just a great overall visual effect of where the market is going, as well as trading bounces. Here we had apologize if I'm running a bit quickly here, but here we've got a lovely divergence, a beautiful bounce off a pivot. That's a nice counter trend for your experienced traders. Here we've got an 89 200 bounce. Now these are just great bankable trades. They're an 85% 90% trades if you win-loss ratio if you trade them properly. Here's a 200 bounce, little double top. well, you wouldn't have taken that for a number of reasons, and I should mention why. One of the reasons is when you're so close to the 89, what do you usually get? A bounce. So you'll see these little double tops. It's against the trend, and you're very close. So one of the things, if you're taking a counter trend trade, what you want to have is angulation away from your moving averages. So if we look at it here, so let me just quickly draw this up for you here. All right, you've got angulation away. So see that angle away here, see that distance. You've got it again here. This is what makes a divergence trader, really helps qualify these. So what have I got here? I've got a pivot. So not only have I got a pivot bounce, now why not take the first one? Because you can see here I actually executed and shorted 10 contracts here for 11 ticks on this particular trade. Now you can see here I also, on the platinum, I had very nice divergence, and that's another great thing about the YM. Your divergence, in my opinion, is a lot more obvious on the YM than in NQ, just like divergence is fantastic on the Forex market. So it had a very nice 11 tick move here, and here one thing you want to consider doing is when you're taking these moves, particularly when you're coming down to the 200, is to what I call front runner. Make sure your order to exit the market is above that, because this is really strong lines of support and resistance off the 89 and 200 you usually get. Now what we had here is another little double bottom here, once again waiting for your zero lag to roll up, and also our platinum is rolled up here. That was a lovely trade. So I'm also firing off, and we won't flick over, we're out of time, nearly out of time today, but on the NQ I'm firing away trades on the NQ. We had a great afternoon here. I also then shorted, and I actually got into this trade because I was talking to a student. We actually well, I shorted 10 contracts here for 11 ticks. I bounced, as you can see here, I bounced on the 89, and this was 11 ticks. So that's $550 on 10 contracts, less your brokerage. That's around the $500 mark per trade there. And then we had a nice little triple top, which you could have taken, but you also had what I call confluence here, where you've got your Andrews Pitchfork coming up here in an uptrend, as well as the 200 here. This is a really strong area of support and resistance, and of course there was a very nice bounce here and up the market went. Now remembering here, and the times here, this is Australian time, so it's not US time, that it is Friday afternoon. Okay, so we do have Friday, so it's another time where you've got to be very cautious with the market. Your volumes drop dramatically, so you've got to really watch that. Here we can see, which is really interesting, and one thing I wanted to show. So this is a 9 range on the YM, my anchor chart. Look at the pitchfork, see the bounces here, and you can see here, and this is one of the key reasons, besides having a pivot point here for resistance on the 89, but here look at this here with the pitchfork, see the resistance here. So you can see here where my trade station has plotted my trade entries and exits there. So traders, overall a fantastic trading day. For the newer traders, once again, anyone can learn these particular strategies. It's not rocket science, it just takes time, and it's, you know, and I suppose the other thing too is the belief that you can do it, and of course that comes with experience. And somebody asked me a couple of days ago, how long realistically does it take to learn today trade? Well, straight away I come back without sounding cocky. I said, how long do you want it to take? Now what I mean by that is the more screen time you gather or have, the quicker you're going to learn how to trade these strategies. So there are 12 core setups, 3 or 4 core setups with the trend. So traders, I'll go and do my the recap now of the euro US dollars. Hope you got some things out. For information on the live trading room and those that have already emailed, I'll get back to you within the next couple of days. Any other questions about my coaching services and training indicators and whatever, please drop me an email at trader@iamadaytrader.com.